Hey there, it's Jason Eichmiller, reverse mortgage expert, and welcome to another very time-sensitive, very important reverse mortgage calculator for the week of November 3rd. It is Thursday, November 3rd. Big thing happened yesterday. Jerome Powell came out, and you saw his evil laser eyes in the thumbnail that I created. But he came out and he raised interest rates 75 basis points, or I was going to say 3/4 of a point. So he's been consistently doing these over the past year. He's going to do it again in December, although we think it's going to be 50 basis points. But the big important thing, that's not so important to us right now, but how does that impact reverse mortgages, right? Is that going, now we know if you've watched this a couple of times, if you listen to any of my, if you watch any of my videos, you know that traditionally as interest rates go up, reverse mortgage loan amounts go down. So this was a major hike. So what we have to do though is we can't just take the logic, we can't just assume. We have to dive deep into the numbers so that you can understand, not from a 10,000 foot view, but from a granular, right? From like where you are right now at X amount of loan amount and Y amount age. Hey, what's going on with these loan amounts today? So this isn't recycled. I waited until the dust cleared from yesterday's rate hike so we could see exactly what was going on. And so we're going to do that. So on with the show. First off, though, or second off, I'm just going to share the website right here. If you do want information pertaining specifically to you, if you just have any questions about how reverse mortgages work or how it could work specifically for you, and you don't want to type them below. General stuff you can just type below and I'll do my best to answer it pretty quickly. But you can go ahead and reach me. My name is Jason. You can call me direct at 888-309-9705. I think my information is probably flashing below on this screen. So you can call me that number. You can email me at jason@keyhomelending.com, or you can go to this website right here, reversequotes.com, put in your info, hit get quote, and we'll pick a time to talk. Also, if you want to see other what other seniors that I've helped and seniors' kids, what they think about reverse mortgages, you can kind of check it out down here on the website. All right, enough about that. You know how to reach me. Let's get into the real important stuff. Before we go into the 75 basis point hike, let's take a look at where the 1 year T-bill is. Again, if you've paid attention to this channel, and I think I'm the only one doing this right now, showing you what interest rates mean with reverse mortgages, I just want you to be educated about this stuff so that really your expectations and what this program can and can't do, they're one and the same. So that's why we go through all this, and I think it's pretty helpful. And I've gotten a lot of good feedback from other folks saying that it's really helped them kind of figure out what they can get out of this, and it helps them make a decision on, hey, do I want to do this or not? So anyway, back to the rates. The overnight, or not the overnight rate, but the 1 year T-bill rate, as of 2 days ago, I'm on Macro Trends. We've used this site pretty consistently. As of 2 days ago, it was 4.75%. It's gone up a little bit. We can look at it historically here. I normally use March 4th as a benchmark where it was 1.05%. And we'll compare what you could get back then versus what you can get now. And if you've been watching this, you know as rates go up, you can get less. But things might have changed a little bit this week. So you got to stay tuned here. Let me go over kind of how it isn't quite what it seems and it isn't quite what is expected. So we know that the rates are high. They're actually higher now because this was 4.75. It was 2 days ago. It's actually increased to 4.84%. So I'm going to briefly share a little a slideshow for us here. I can never do this very smoothly, but let's try. Hold on. Let me actually get my face off of here if I can. Here we go. Let's just do this. All right. So you don't need to see me. You need to see this this information. So I'm just going to swap it. I've got two screens, so it always defaults to the wrong screen. So I have to manually go and then change it. So this is Jerome Powell. You might not recognize him. It's kind of a close up on him as he increases rates and takes us straight towards an inflation. So what does his rate hike do to reverse mortgage cash? We're going to look at loan amounts this week, And as I teased before, it might not be exactly what you think. So let's go here. All right, so as we already touched on, yesterday the Fed increased rates another 3/4 of a point. How does this impact reverse mortgage loan amounts? Well, here is the exact one-year Treasury bill. It's 4.841. You saw, and you can see right here, it's from 8:59 a.m. this morning. That's a little bit better than 2-day-old data, but it's kind of still, we see that it's going up. We all understand that. So we know, again, it's going to keep going up as they try to mess with inflation. So if you've been here before, you've seen this. Actually, move this little thing over here so you can see it. How has reverse mortgage money to you, cash to you, changed over time? And we're going to look at a 72-year-old with a $400,000 loan value. But if you're a different age than 72, if you're 72 with a $400,000 loan value, we just got lucky, or home value got lucky. But we're looking at a 55-year-old, 62-year-old, 72, 82, 92-year-old, and home values of 400, 700, 1 million, and 2 million in the subsequent slides. So we could see right here the one-year Treasury rate on March 4th was 1.05%. Then as of last week, it went up to 4.57, and today it's at 4.84, which is over a quarter point, over 25 basis points higher this week than it was last week. Not shocking there. But what is shocking, I guess what isn't shocking as well, is that the loan sizes from March 4th to October 26th have dropped drastically. You can see that. The HECM, which is the government FHA reverse mortgage, dropped 40-something thousand bucks, and the proprietary dropped just about as bad. But then look at this here. The difference between last week at 4.57 and this week at 4.84, it's dropped. The HECM's dropped a little bit, but nothing too terribly. Nothing like as drastic as has happened in previous weeks. And the proprietary reverse, you can't see the bottom, it's kind of cut off, but the proprietary reverse is actually getting $300 more than they were before. And you say, who cares? It's $300. Number one, I say it's $300. Pick it up off the ground. But number two, it just shows that the trend has kind of slowed down, which is a nice thing. And I told you before, and if you've been with me long enough, you're going to get the truth, whether it's good or bad. And this is the rate hikes and the one-year T-bill going up is definitely bad. But we're seeing that the impact on reverses is kind of changing, which is interesting. We'll have to see how it ends up going for subsequent weeks, but it's not as bad as I thought it would be. So let's go to the next one here. If you were born in 1967, you were 55. And I cannot believe that people who were born in 1967 can get reverse mortgages, but it's just math. Pretty neat shirt too. So let's look at 55-year-olds. How much can they get? Just took a drink of water. Now, the reason why you see NA for the HECM, again, HECM is the government FHA one, reverse mortgage, is because you have to be 62 to get an FHA reverse mortgage or a HECM. So that's why this is kind of blocked out. But look at this right here. Oops, let me get this screen sharing thing up here where it's out of the way. $400,000 value. The proprietary reverse didn't change one bit. $700,000, it dropped $600. $1 million value dropped $1,000, and a $2 million value, it stayed the same. See what I'm saying? Again, we expect these loan amounts to drop drastically, but they haven't. They've basically stayed the same, at least for a 55-year-old. Let's see what happens when you're 62. 62. Grandpa's doing, what is that? Can you comment below if you know what this is? I thought he was playing hockey at first, but he's not. Is this curling? This might be curling. But he's curling. He's on ice, and he's wearing a short sleeve shirt. He should be wearing a long sleeve shirt. So anyway, please comment below and let me know what that is. Thank you. All right, 62-year-old. What can you get? This is where it's changed a little bit, at least with a $400,000 house. Your loan size is dropping almost $3,000. That's almost 3%. But your proprietary is staying the same. And actually, if you look at the bottom, the proprietary has stayed the exact same for 62-year-olds across the boards. So every single loan amount, the proprietary, you're going to get as much this week as you could get last week. The HECMs dropped a tiny bit, right? And by the way, you'll always see the HECM on home value 1 million and 2 million. You always see that it's the exact same because the maximum home value for a HECM is $970,800. So whether your house is worth $970,800 or $13 million, you're getting the same amount of money. So if your house is worth over $1 million, that's when we're absolutely exploring a proprietary reverse for you. So anyway, but you can see that it's kind of the same right there. All right, let's see what this cartoon says. Eventually, I'm going to run out of cartoons. I'm going to ask you guys to send me some for help. Leave the cell phone. If it rings, people will see that you don't know how to answer it. That's my dad, although he's in his 70s. So this is this cartoon makes sense. All right, let's see, 72. Alrighty then, home value, 400. First of all, you can see again the proprietaries are the same. The only thing that changes if your house is worth 400, the proprietary can give $200 more than it did before. By the way, big trend. You can see a younger age is again the proprietary is going to give more than the HECM. Okay, so HECM, and you've seen this week after week, but I'm going to keep telling you. So HECM, $400,000 house went down a little bit. 700 went down a little bit. 1 million still. Nothing big, about $1,000. That's all. Not that bad. Age 82. The trouble with today's generation is that they can't stand on their own 2 feet. Well, these ladies are certainly standing on their own 2 feet, aren't they? All right, age 82. How much money can you get? Let's see here. The proprietaries still giving the exact same amount as last week. This is good stuff. And let's look at the home value. 400. Same thing. Actually, the HECM's giving $100 more than before. At a $700,000 value and at $1 million value, at 82, the HECM actually has improved from last week. Crazy. And again, this is why we have to go through the numbers like this. This is why you have to have a calculator done. I'll say it till I'm blue in the face, and you're probably like, man, stop beating the dead horse. But it's so important to actually run the numbers. Don't assume, because I've done over 460 of these, and I made the assumption that they're getting worse. And I see this, and I'm running numbers for people over the week. I'm like, whoa, we're actually doing okay right now. So anyway, that's the 82-year-old, and let's do the last one, 92-year-old. Just when I began to understand Medicare. Now, obviously, this is a Medicare cartoon, and I don't understand Medicare. I understand it at maybe a 30,000 foot level, but it is so complex. People say reverse mortgages are complex, which is wild because it's just a loan where you decide if you want to make payments or not. But Medicare is truly, God bless people who sell Medicare, and I a few buddies who do, and boy, oh boy, they go through a lot. they have to be experts in 17,000 different things. All right, 92-year-olds. Let's see where we're at. Look at that, proprietary. You're getting at 92. You're getting the exact same as before. So you can see that, except for 1 or 2 exceptions of a few $100, the proprietary reverse is giving the exact same of this week as it did last week. The HECM for a 90-year-old, it's dropping a little bit. So we see it at $400,000 and a $700,000 value, it dropped. $1 million, it stays the same, which means, of course, at a $2 million, it stays the same as well. So that is this week. I wanted to keep this video shorter than normal here. So what is the big picture of this whole thing? I'm going to get myself back up on camera if I can here. So what's the big picture? And I'll do it with this with the website there. Let's minimize me here. Okay, big picture of this is that yes, rates are going up, but the reverse is just about the same. The HECM is a little bit worse off than it was last week, but not as bad as I thought it would be. And the proprietary is just chugging along. Here is something I'm really saving for another video, but one of the big proprietary lenders, you can see that well, maybe you don't know. There's a bunch of companies that do proprietaries. Proprietary just means that it's outside of the FHA and there's individual investors. Another major reverse mortgage company paused their proprietaries yesterday. And this was in the middle of the big, it's called NRMLA, which is like the Reverse Mortgage Lobbying Association, basically. It was in the middle of their conference. So they paused it and they said that they're coming out with lower loan sizes. So normally this is a monkey see, monkey do thing. I could probably expect, I don't have a crystal ball, but historically I'm pretty sure that next week the proprietary reverse mortgage is going to take a hit. So what does that mean for you? If you're considering a proprietary, and you would get a proprietary if your house is worth a decent amount of money, or if you want a bigger loan size or your money all in one lump sum. Also, proprietaries are great because they barely charge any fees. If you're considering a proprietary, you probably want to jump on it because without going too deep into it, these investors are afraid. They are worried that as interest rates go up and home values start to drop a little bit, well, they have to hold the bag because these proprietary reverses have to be non-recourse, just like traditional HECMs. In English, what non-recourse means is if the economy crashes or if you owe too much on the or more on the house than it's worth, nobody can say get out of the house, and nobody can ask for their money back. And when you pass away, then let's say $50,000 more is owed on the house than it's worth. When you pass away, then they can't come after your estate, your kids, your bank account, your life insurance, any of that stuff. The lender, with these proprietaries, the lender has to take it on the chin. They have to, that $50,000 comes out of their pockets. So they are afraid. This is why they're raising rates. This is why they are lowering the loan amounts. If I'm projecting correctly, and again, I could be wrong, right? No crystal ball. I'm not a future teller. I'm just a guy who's in the middle of this industry every single day. I could see them putting a pause on this in a few months until the market improves. But right now, the program is here. So long-winded explanation for me saying right now, if you're thinking about doing it, give me or give somebody else, another reverse mortgage expert, hopefully me, because I do my best for you. I'm pretty transparent, as you can see. You'll know everything about this, the goods and the bads, and what you can do and what you can't do up front. But investigate this now, because you don't want to be waiting for something to happen and then something happens, but that something is in either decreasing the loan amounts drastically or getting rid of the program. So, and I really don't want them to get rid of the program because I do a lot of these, and yeah, that wouldn't be good for the Eichmiller family, and sure wouldn't be good for you either. So, oh, and by the way, if they do discontinue the program, everything that they've sold that was sold earlier will stand. So they can't ever say, all right, well, the program's changing, the program's gone, now we're going to come back on you and get our money back. They cannot do that. So with that said, I'm going to let you go. If you need me, give me a holler, 888-309-9705. If you have any questions or advice, anything, go ahead and you can comment below. You can shoot me an email. Go to reversequotes.com, whatever you want. But all right, I really appreciate your time and your attention. And I'll tell you this, if you do reach out to me, I'll do my very best to educate you and help you figure out if this reverse mortgage makes sense for you or not. All right, take care of yourself. Have a wonderful day.